A lot of fundraising is happening, but is it going to really lead to anything or not? Pankaj has been digging out data on that. Pankaj, what's the finding?
Well, as you're saying, Bharti, it was first and then it was Idea. And incidentally, Idea Cellular's, the rights issue also opens today. It ends on 24th of April. It's a very, very big issue when you talk about as far as the entire, funding is concerned. It's about 25,000 crores. Even Bharti was not a small one when we talk about the entire funding. So the key question is the fundraising by Vodafone and Airtel enough to fund the losses and investment till they get back to profits? ARPU's improvement is enough to negate any market share loss? And is there any tariff hikes which is coming in now that there are notably 3 players? But when we talk about the debt, it's particularly high. So net debt for Airtel is 4.5 times. For Vodafone is about 8.4 times. Vodafone, just talking about the rights issue, 25,000 rights issue opens today. It's 2:1 sort of a rights issue. So total dilution in excess of about 200 odd percent. But expect that this will meet the requirement for the next couple or triple of years. On the other hand, you had Bharti Airtel raising about 32,000 crores via the rights issue and perpetual bonds, and this will lead to an equity dilution of 22%. So big war chest coming in. Remember, Reliance is a big cash cow, or a big cash generating company at this point of time, and that's why they can fund Jio even if they are making losses. So all 3 companies have good war chest now, good pump in coming in from promoters in different companies. But will the tariff hikes is the key question? Will it be enough for this particular cycle?
We'll take that conversation forward. 2 problems for the telecom industry: bad balance sheet, bad business. Bad balance sheet will get fixed for next 2 or 3 years, but bad business environment or a challenging business environment will not get fixed till the time Reliance Jio does not blink an eyelid. You can invest in the infrastructure, you can increase consumer service, but Indian consumer is not price sensitive, but very, very, very price sensitive. So which way the cookie is going to crumble? Will it be coming back to the incumbents, or there would be one dominant player who will be disruptive and will make sure that incumbents, they continue to suffer and suffer and suffer? Sanjay Kapoor joins us, telecom expert, and we've got Nitin Soni, who represents Fitch. Gentlemen, good morning and thank you for joining us. Sanjay, large commitment coming from the promoters of Idea Vodafone, large commitment coming from the Mittals. They are doing whatever it takes to fix the balance sheet, but fixing of the balance sheet is part A of the problem. The larger problem is part B, which is environment and pricing.
Yeah, absolutely, Nakunj. You're bang on this one. The good news is that now we are seeing the promoters pump in some monies into the company, and they're putting their monies where their mouth is. And I think that will give confidence to others in the industry and associated with the industry. However, India is not delineated from rest of the world. There are 2 key phenomenal changes that have hit the world. One is that there's a further consolidation of the industry across the globe, and now more and more countries you see there are only 3 players left, with one player really making money, the other one on the edge, and the third one really losing money. So no matter what size of balance sheet you have, the amount of money that you have to pump into the transformation on technologies is the same, and therefore the pressure on the second and the third companies is more than that on the number 1 leader in the market after market. That is one phenomena. The second phenomena is that no matter which part of the world, the amount of consumption of data is just increasing by leaps and bounds, and the data could grow 10x in every market, but the consumer is not willing to pay a proportionate increase in price for that additional consumption or a form factor change. Now that puts a lot of pressure on everybody, and therefore the buzzword across the globe is share, share, share. You got to share your networks, you got to share as much as possible the passive infrastructure, you got to share whatever, to make sure there is a economic sense of the business that you are building. Now India, like I said, is not delineated. India has a further problem. The problem is that the challenger in the market is halfway through on his aspirations. He's not through on his aspirations. So if he lifts his foot from the paddle, that takes away his aspiration and makes things easier for the incumbents. So I don't see that happening in a hurry. I think he'll keep on pressing the paddle till he reaches his aspirations, because he has a well-funded balance sheet and he knows how to play this game to succeed. As far as the incumbents are concerned, they have again, 2 very big decisions to call on. One is to say, okay, they've raised this money this time. How long will this money last? Because they're playing a catch-up game on 4G, and they're building up their networks. The customers across the globe, no matter what technology you use, they want a video grade network which gives you an experience devoid of the technology that they use. And it could be indoors, outdoors, everywhere that that experience is required. The fact is that India cannot, with the existing investments on the cards, be sufficient to offer a world-class service to their customers on a perpetuity. This will last 2 years, 3 years, it's anybody's guess, but this is not going to last longer than that. And if the prices and the defunct business model does not reshape itself, there's no way there'll be cash flowing back into the business to enable them to invest, and therefore the deficit will have to be funded by somebody else. Now, in that sort of a circumstance, your net debt to EBITDA can only get worsened, each time you raise some funds, because your EBITDA is not rising because of the price suppression that's there in the market. What are the choices available with the operators today who are competing? There are essentially 3 choices according to me. One is that they become a dumb pipe, and dumb pipe means they'll have the best access, in which case the revenues will come from subscription to these guys. And we know that customers not willing to pay for the incremental data that he's using proportionately. The second is become a smart pipe. But even if you become a smart pipe and you play in the ecosystem, what is the revenue stream? The revenue stream is still access. So the money that comes to the OTT players comes by way of valuations, not by way of EBITDAs necessarily in the short run. And therefore you don't partake in their value creation, and therefore you don't make money out of that. So it's very much a business case that is yet to be tested to say I can make money doing that. And the last one is you become a services provider, you become a digital platform, which is a non-option with the operators in the country for now, other than Jio probably.
Yeah, you brought up some very interesting points, and I want to stick to the first one that you spoke of, that, with one player on top, it is definitely going to become a very difficult race for the other two. So, Nitin, in light of that, massive fundraising plans by these telcos, they're building their war chest, but is the fundraising by Vodafone and Airtel enough to fund the losses and investments?
Yeah, thanks for having me on the show. So let's talk about the Bharti Airtel first. We do have a rating on them at BBB- with a stable outlook, and we believe that stable outlook reflects the equity injection of $3.5 billion coming in, and $1 billion perpetual bond which they will raise soon. And we do also believe that they will raise another $3 billion, $1 billion out of the African IPO during the mid of this year, and another $2 billion from the sale of stake in Indus and Infratel merged entity. So that will, give a lot of relief to the balance sheet. Bharti's FFO adjusted net leverage is quite high, and that equity injection will reduce the leverage considerably. And we do believe that after all these transactions, Bharti will be left with deferred spectrum liabilities in its Indian operations, and will have about $2 to $2.5 billion at its African entity, which will be quite comfortable. So, and if you talk about the Vodafone Idea, I think that entity is a bit stretched right now. They are losing revenue market share rapidly to Jio and Airtel as well. And, at the time of the merger, they said their combined revenue market share was about 40%. And last quarterly, they announced it was 32%. And our sense is that Jio and Airtel revenue market share right now is head to head about 32-33%, while Vodafone Idea will gradually come down to below 30%. So in that light, I mean, the $3.5 billion equity issuance which they have announced will be insufficient going forward, because they have to increase their capex as well. They have to at least invest about $3.5 billion plus annually on the capex to avoid any network congestion, and their EBITDA has fallen significantly. Their EBITDA is only $600 million plus, which means their net debt to EBITDA is quite high. So I think we would see some more stake sales or equity injections on the Vodafone Idea side, but I think if we talk about Bharti Airtel, they look comfortable at BBB- rating.
Nitin, when you're considering debt, have you also done some work on cash flows and where the cash flows are headed for Bharti Airtel for next couple of years?
So these companies are operating at negative free cash flows because their EBITDA levels or the cash generation is insufficient to fund their large capex plans. And for financial year 2019, we estimate that Bharti would invest anywhere about 3.8 to $4 billion, and combined with the interest cost and other related cost, they will have a negative free cash flow. So they'll have to fund it either through the equity injection or through additional debt funding. And Vodafone Idea obviously has a large negative free cash flow because of the capex requirements. But I think what we are now looking at on these incumbents is that their capex, at least for Bharti, has probably peaked at $4 billion for this year, for this financial year. So what we do expect that FY20 we may see a reduction in capex for Bharti, but while Vodafone Idea will still have to continue to pump in a lot of capex. So, I mean, that will provide some bit of a leeway on the cash flow to Bharti. And Jio obviously continues to invest significantly, about $3.5 to $4 billion plus on capex. So, I think barring the 5G capex, which will probably come in FY21, depending on when auctions will happen, I think the core capex for 4G has probably peaked now in the industry.
Which they are, in fact. Sanjay, I just want to get you in on this because Vodafone Idea, the rights issue opens today. It's a sizable one, 25,000 crore rupees. Can it help resurrect or at least kick the can down the road for Vodafone Idea?
Well, I was listening to what Nitin was saying. The issue is that in this industry, when you say that anybody's capex has peaked, you basically forget that there's another dimension to it. The dimension with which you peg it is the customer experience. With the current customer experience, yes, the capex may have peaked for some. But if you look at that customer experience and say, is that sufficient? Is that what India needs to build to be globally competitive? I don't think so. And therefore, the whole relatability to fixation of or peaking of a capex changes the moment you change the customer experience. Now, coming back to the Idea question that you had, of course, Idea has a catch-up game to play. They were slow on adopting 5G and having 5G experience all across the globe. And to catch up, they will have some war chest now available to start that journey. Will this be enough, for the next 3-4 years? I'm not too sure of that, because at the end of the day, when you look at what the incumbents have built, even the best of the incumbent operators today, when you look at his fiberized sites, are less than 20%, right? And if we really have to provide a great, whether on 4G or on 5G tomorrow, the transport network that is required to offer low latency services, high internet speed, Internet of Things as a maze and as a service, you require a very robust backbone to do that. And I guess that what has been invested up to now is essentially to cater to 4G and to come up to speed on 4G. But are we ready for future and the form factor changes and a video grade experience for the consumers compared to rest of the world? You look at what regulators are doing in most countries, they are actually upping the game, and minimum standards for the speed, latency are being reset in every market of the world. India's not got there. We first have to do the basics. And for that, yes, the capex might be enough. But to really be globally competitive, I don't think these capexes are enough, especially when 4G is just about a few years old and we are already talking 5G globally. It's a matter of time. India can postpone it for 2 years, 3 years.
Gentlemen, we could just leave it there. We've just been in a very engaging conversation with both of you.